Good afternoon. My name is Nishan Gundalia, and I'm happy to welcome you to this chat. As we wrapped up the union budget this week, where there were some major announcements as well as some hits and misses, we at TBNG thought we will do a quick 10-minute debrief for you. We have with us our director, Mr. Tarun Birani, who will help us decode and share his view in terms of what he felt about the various budgetary announcements, which could directly or indirectly impact us. So, Tarun sir, first thoughts on budget.
So thank you, Nishant. So, well, it was a good budget with a little bit of everything for most of the sector, with again a big push on infra, some respite for the salaried classes, a strong pivot towards building and promoting new economy as well as new tax regime. However, it also seems in terms of announcement benefits, there are some steam left in the engine. And this year being a pre-election year, it was along the expected lines with some decent relief, yet making it more of a non-event at many places.
So now let's drill down the key 3 to 4 specifics which will help and update our viewers in terms of how to navigate the coming financial year. I will start with the favorite first, the personal income tax announcements. Do you want to elaborate on some benefits as well as clarify on any possible doubts that may have arisen?
Right. So certainly the key announcements were first budget 2023 increased the income tax rebate, which is one of the most important announcement, to rupees 7 lakh from 5 lakh previously. Those earning up to 7 lakh will be exempt from paying tax. To be clear, this will only benefit individuals with an income of up to 7 lakhs. The basic exemption threshold in the new tax regime has been increased from 2.5 lakhs to 3 lakh, which is again a big positive. There has been a rejig in the tax slabs for the old tax structure. The number of slabs have been reduced from 7 to 5. Income of up to 3 lakh is exempt from tax. The tax rate is 5% on income between 3 to 6 lakh. Income between 6 to 9 lakh will be taxed at 10%. The tax rate on income of 9 to 12 lakh is now 15%. Income of 12 to 15 lakh will be taxed at 20%. The tax rate is 30% for those with an income of more than 15 lakh. Again, there is a benefit of standard deduction has been created for paid workers and seniors under the new tax scheme. Mrs. Sitaraman stated that reward would be approximately 52,500. So again, one of the very important announcement, and this is for most of the HNIs who are our clients currently. For them, there is a very significant announcement in terms of the peak rate surcharge has come down in budget 2023-24. It has the government has reduced the surcharge in the highest tax bracket with the highest surcharge rate from as high as 37% to 25% to provide a relief to the richest taxpayer. So again, I was doing a little bit of number crunching. The tax which used to go as high as almost 43% will come down to 39%. So it is approximately a 4% reduction in the tax rate for people in the high, let's say a crore plus income bracket people. So that would be very, very significant. Again, to make it extremely clear to the viewers, please note that all these announcements have been made for new tax regime. Again, the government intention looks very clear that they plan to move everyone into the new tax regime going forward with no deductions and no exemptions kind of thing going forward. But I think they have continued with the old regime, but it clearly demonstrates that they want to move everybody in the new tax thing. And the new tax regime does not have any of the section 80C and all the other deduction which we used to claim exemption for insurance payment, ELSS, FDs, and etc. However, the tax rates are comparatively lower. Again, it's hassle-free. You don't need a chartered accountant to help you file your returns. It has been made very, very easy for a kid can also file the income tax return. So again, the move is to simplify and the government intention is that each and every citizen of this country file the income tax return. So movement is going towards that, which is actually very good for getting India into more formal economy. And so hence it's one's own individual cost benefit analysis one need to do to decide whether to keep the old tax regime or the new tax regime. Yes.
Sure, thanks. Next, we will come to the insurance announcement, which is again an important issue, which was made wherein for traditional insurance policies for premium beyond 5 lakhs, exemptions have been removed. If you could enlighten us on the same.
So it has been proposed that the income will not be exempt if the aggregate premium for life insurance policies other than the unit linked policies issued on or after April 2023 exceeds 5 lakh rupees. ULIPs with an annual premium of about 2.5 lakh rupees has been already lost its exemption in the 2021 budget. This has no bearing on the tax exemption offered for the sum received up to the death of the insured. It will also have no effect on the insurance policies issued before March 31, 2023. While this will reduce individual desire to purchase high value traditional insurance policies, and I know a lot of popular insurance policies are floating in the market to get that benefit. It will raise the emphasis on term plans and pure risk cover, which is a desirable thing according to me. I feel investment and insurance should not be mixed. They should be kept separate. And to make it very simple, a normal term plan or a mediclaim plan is enough to take care of your insurance need, and the balance things can be taken into a more capital market oriented structure. And there are good financial instruments like mutual funds and all these are available currently, which are very transparent, and at the same time liquidity is very high, unlike most of these insurance policy where illiquidity could be one challenge. So I feel it's a very good move.
Another key announcement has been the sustained momentum in capital outlay towards infra investments. Government continues to give in terms of especially the infra, and the capital outlay continues to be there. Your thoughts on the same?
Yeah, so exactly. I think India is a growing economy, and as we look at developed markets where the infrastructure is in place, India has a lot of catch up to do to reach there, right? And it seems the government seems very focused on achieving that. So they have kept, they have almost 10 lakh crores of allocation, which is almost a 33% rise and representing almost 3.3% of the GDP for the capital outlay or the capital expenditure part. This allotment is over 3 times the amount allocated in 2019 and 20. So it again shows a very significant focus of this government to move towards more and more capital expenditure in the infrastructure side. When compared to the allocation of 2014%, this increase is also significant. In terms of specific, railway outflow has risen from to almost 2.4 lakh crores, the highest ever, and 9 times of 2013 and 14. So in terms of quantitative aspect, there are hardly any complaints. However, the execution timelines and the qualitative parameter of these outlay will hugely determine the success of these announcements and how it trickles down to the final beneficiaries.
Great. So while there were many major announcements in terms of changes in TCS for LRS routes, attractive tax for different investment structures such as InvITs, etc., carry forward of laws for startups, due to the paucity of time as well as access to information with all the viewers, we covered the 2 to 3 key areas and our takeaways from the same. So thank you for listening to us, and thank you to our director, Mr. Tarun Birani, for sharing his insights. Before we wrap up this chat, any closing comments from your end?
Yeah, so well, Nishant, I feel it's a working man budget and more of a non-event in many of the places. Also, the fact that there are no major surprises in capital gains on the negative side was an exempted yet much needed relief. This budget has tried responding to some key macro challenge facing country and individuals, such as sustained inflation, high interest rate environment, and balancing the rising deficit across the world. My key interpretations are the strong push towards infra, towards pushing new tax regime will continue going forward. But I believe there could be goodies left for the next budget, which is an election year, in which government could come out all guns blazing, and we will see some major positives. And apart from that, I feel the government focus looks more toward financialization of economy, and that is where we are seeing the increased focus towards bringing all citizens of the country into formal economy. So that is one trend which we are observing from last 7-8 years, and government seemed very focused towards that. So thank you very much, and I hope it benefits all of us.
Thank you. Thank you everyone for your time, and thank you for staying with us. We'll just wrap up the call now. Thank you.